Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us. So obviously we're seeing a sell-off in the stock market as of late, but we wanted to sort of put it in perspective and sort of calm your fears a little bit about what's happening in the market. We are now actually officially in correction territory with the NASDAQ, the technology-laden NASDAQ, and the small cap Russell 2000. And a correction is measured by a 10% from peak to trough, and that's where we're at with those two indexes. The S&P almost got there last Friday, but didn't quite get down 10%. Josh and I would have thought, based on what's going on in the Middle East, that markets would be down more than they are, so we're certainly encouraged by that, and Josh can talk about that as it relates to earnings. But I thought something that we should look at is just to sort of zoom out and put this in perspective. Go back to 2022. Remember when Russia invaded Ukraine? The price of oil went to $128 a barrel. We're right about 100 right now. And stocks, remember, if you remember back in 2022, stocks and bonds sold off. The aggregate bond index was down double digits and stocks were down over 20%. So relative to that, this market is not looking bad at all. And then I thought also we should look at, we've had 7 oil shocks, which is really what this is for the world, going back to 1990. And if you go a year out from the beginning of the oil shock, the average return for the stock market was 12%. And if you go 2 years out, the average return was almost 33%. So we think this is going to play out similarly. I know when your account value goes down, it's not pleasant, and we don't think it's pleasant either. But you know, these corrections that we're getting, right, like the one we get right now, are important and healthy for markets, because remember, markets at the end of last year were sort of perfection and were quite expensive. And so when we get something like this happen, obviously they're going to sell off, and it sort of resets markets. So we are not concerned in the least. But Josh can talk about market driving events that are like coming down the line.
The anchoring heuristic is one of the most common phenomenons in market psychology, that everyone anchors to that all-time high portfolio value, and we, just like everyone else, don't like to see account values go down, but it's really just the price of entry. I mean, the average intra-year market drawdown is north of 15%. We're not even to an average intra-year drawdown at this point. So remember, what's actually important is that earnings starts here. We're a little more than a week out from earnings seasons. Here's the data. Earnings revisions are being revised higher. The market cares about this event only insofar as its ability to impact earnings negatively. The impact of the tariffs as a percentage of GDP was significantly higher than these higher oil prices would be in absolute dollar terms. So that's another thing to take into account. Of course, we didn't see a recession with the imposition of tariffs in 2025, and similarly, with earnings being revised higher, unlikely to see a recession with current oil prices as they are. So don't anchor to account values. Remember, that's the price of entry in markets. The reason returns are so good over time is, of course, volatility events just like this. And remember, earnings are ultimately what's to drive stock prices. And when valuations were expensive as they were entering this quarter, it makes absolute sense for stocks to correct on perfection not being fully realized.
So earnings season starts later this week, and we're going to get a pretty good idea about what that looks like. We're expecting, somewhere in 13 to 15, 16% earnings growth year over year. And really, the reality is demand hasn't been affected here in the United States by the war in Iran yet. Now, if this goes on longer, of course, all that can change, but we have seen zero effect on demand here in the United States. And so we expect this to play out and be relatively short-lived. Remember, politically, this is going to play out where the president is going to want this to end sooner than later, because we have midterms coming up. So, as always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.